In less than 5 minutes, I'm going to share with you how to smoke Tesla's chart from a technical perspective. You want to start by zooming out and getting the big picture. That means you're going to go on a max time available and select a daily, weekly, monthly, some sort of view where you could zoom out and understand the big picture for what price range is relevant. Once you do that, you're going to zoom in and observe the all-time high, sell off until the previous week where we see this massive engulfing candle and ultimate reversal in the stock heading back towards the all-time high. So there's two levels that I want to identify here on the weekly. It's going to be the highest green close of 2026, and we're going to mark a level right there. Also, what I notice if I draw a hypothetical line across the chart, we're seeing a support and resistance flip here going back to September. So I want to also make a note here of that candle wick low because I'm noticing that going back from September all the way to November, we have a multi-month level of support that then breaks out to all-time high, retest, uses that same level as support before ultimately breaking that level down, retesting it, failing once, twice, three times, four times over the course of multiple months and then going lower. Now we are very close to melting back up and retesting that previous support and resistance flip. So what I want to know in my head is what's going to happen when we revisit this level? Are we going to get smacked off of it and go down, or are we going to blast through the range like we saw previously when we made that big run to all-time highs? Are we about to see a repeat? That is the ultimate question that we need to be asking ourselves. So what I did is I placed both of those levels on the chart. As you could see now, it's more visually appealing. You could understand where the resistance was from a weekly perspective. When I zoom in on the daily, it'll be even more obvious to see. And as you could take a look here, almost acted as a magnet to that 417.44. Again, this is going back a very long time. It's not 1 or 2 days. This is now going on 216 calendar days over 149 trading days. So this is definitely a significant level and must be mentioned on the chart. The second is that weekly high that we mapped out. What I find really interesting is if we zoom into the chart here, we notice that the level works really well. As you could see, it rejects perfectly off of that 449.06. This is multiple rejections on the daily from January 5th all the way to the 23rd. So 2 weeks pretty much here of struggling, trying to fight to get above it, and ultimately failing. Now, the last thing that we're going to do that I would like to see for my own preference is going and selecting that Fibonacci retracement tool, mapping out the low of 2026 to the all-time high and seeing what ranges we get in between. So now I've placed the lines on the chart. I got rid of the 50% fib because we already have our yellow line that maps out perfectly already. It coincides with that level. So I'm going to leave it alone. Again, if you guys want that proof, we'll put the 50 back on and you could see how similar the level is. So the 50 here is 418.04 if you want to have that level on. I'm not going to stress over 60 cents, so I'm just going to leave it alone and keep our level that we already had mapped out. It's showing me that my levels are mapping out with the Fibonacci, which is perfect because that means my mindset was in the right place to begin with. So as we zoom in now, it's very obvious that we could see on like a 4 hour, for example, how the stock is just perfectly selling down, trading within the range, using the Fibonacci as perfect resistance, breaking it down, going to the next level here, and now using a lower frame as resistance consistently on the chart. This is textbook bearish price action here. Lower highs, lower lows, this sort of 45-degree angle down like stair steps. This is textbook stuff, as I said. So now when we see this monster melt up here where the stock is up tremendous, and let's say the past 7, 8 days, it's up 20%. Now you want to be mindful of getting back to those old levels and where the stock could potentially run into some turbulence. So that is what we use the Fibonacci levels for. Very simple, straight to the point. We don't want to overcomplicate it. Your upside targets are going to be 417.44, 437.10, 449.06, the weekly high, 460.69, 475.40, and then the all-time high retest, 498.83. Downside support would be 400. 360 for where Elon Musk bought, 371, and 337.24. Really quick before I let you guys go, I came back the next day and I went over a few micro lines. The first one is Friday's high 409.28 labeled accordingly. Monday's high 406.80, 396.65, and the last level of support would be 386.30 on the daily. Last week's low 381.80, just so you could have that visual representation on the chart if you're going to trade, if you're going to scalp going into earnings. I know we went a little over 5 minutes, but I really want to explain it to you guys on the daily here. You could see where there was support once, twice, three times, four, five, six, gap in the middle. Then we have a rejection right at that same exact range there. Okay, so point of significance on the daily would also be that 386.30, and we could label that maybe pink in a visual just so we could see that cue on the chart where we've had numerous bounces or buying demand, then flip-flop rejected and closed right below that level there, which was a close of 385.95 right at that range. Okay, now we've broken out, retested this. We want to see how it responds to that previous support on the daily chart. Before we wrap this video up, I want to point your attention to our website, avidcapital.co/discord, where we go live most days throughout the week on the mic. We trade, we share our perspective, stock setups and opportunities. We do options, futures, all of the above, and we really help you navigate this extremely turbulent period in the market. Does not matter what's happening on the macro view. If SPX is down 100, up 100, we're able to find opportunities every single week and help you guys navigate this very, very tough market. I would say in the past 6 years, this is the toughest market to trade without a doubt. The whip action, the chop is just absolutely incredible. And again, a lot of traders are getting hurt badly. So if you're looking to get back on track, if you're a new beginner, head to our website, avidcapital.co/discord. Takes about 60 seconds to sign up. We'd love to have you and share with you our opinion, our analysis, and how we could stay one step ahead of the competition. Besides that, guys, have a fantastic night. And as always, we'll see you in the next one.